Very good afternoon, ladies and gentlemen. Monsieur le député, cher Alexandre, thank you for joining us today for what promises to be an exciting debate. I believe you need little introduction. You are the Member of Parliament for Overseas French Citizens living in Northern Europe. You were elected in 2017 and you are a supportive Anglophile. You were nominated by the French Finance Minister at the end of 2019 to conduct a report on green finance, which you officially submitted to your Ministry of Tutelle in July this year. So let me start with a quote of yours, actually, dated 29th of July, where you said that coronavirus is a foretaste for what will happen if we do not accelerate the fight against climate change. Now, this sets the tone, and all the more so that no one else than Bill Gates himself made a very similar comment 4 days later. So a warm welcome to all of you, and thank you for your time. Yesterday, we passed 100 registered participants, and this is an absolute record for the forum in its new digital form. And it is a testament to the huge interest in the topic and for your report. As I know you can't see on Zoom who is really participating today, let me maybe briefly lay the ground on the audience with a good mix from France and the UK, but also as far as Lithuania. And I will just name a few. There are obviously many investors and financial players on this call, from the venture capital communities such as Greencoat Capital, private equity firms, Alter Equity in France, asset management companies, family office with Creadev, banks and financial institutions, BNP Paribas, HSBC, entrepreneurs, corporate business leaders from very big international groups such as SPI, Hitachi, Shell, financing intermediaries and lawyers, and also players from the charity world with the Galapagos Conservation Trust, organizations with London and Partners, both their London and their Paris office, non-executive organizations like Net on Board, the European Community, and nonetheless one of yours with Florence Gomez, the former Managing Director of the French Chamber. So I would just like to salute you all today. But also a special message of thanks and gratitude to the formidable work of the French Embassy in London, who earlier this past March, before lockdown, put one-to-one together and organized a dinner at the embassy as part of your field work for the report, and particularly Gauthier Well, who is a regular champion of our forum meeting. So thank you for that. I'm Jean-Philippe Verdier. I'm the co-chair of the Climate Change and Sustainability Forum at the French Chamber, and that has been the case since 2011, alongside Nidhi Baiswar. I'm also the founding partner of Verdier & Co. Corporate Advisory, and we are an independent investment bank set up in 2016. We advise corporate clients, investors on M&A transaction and fundraising, particularly in the French and the UK market, and as you can expect, very much around sustainability and clean tech topics. And we compiled some of the data that you will see later today, and happy to share more offline, of course. Nidhi, would you like also to give a few words about yourself?
Thank you, Jean-Philippe. Welcome, Alexander. My name is Nidhi Baiswar. I work as Head of Sustainable Design and Construction for Bouygues UK. Now, my role involves, major part of my role involves putting strategies and visions together for our project to achieve certain targets on sustainability, climate change adaptation, and things like that. Now, finance plays a very important role in achievement of all those targets, KPIs, and the success of our projects. So looking at the future of green finance is something of great interest for me. So I'm quite looking forward to, well, interviewing you, Alexander, and hearing from you in the next few minutes. Thank you. Over to you, Jean-Philippe.
So just a few words about today's debate. So Alexandre will introduce his report, Green Finance, for 7 minutes, Alexandre. And then we will move to the interview part for 20-25 minutes with a few quiz questions in between, just to spice up the debate. And then we'll open the floor to questions from the audience for an equivalent amount of time. So as you are a big number today, you will realize that I need to urge you to make sure your questions are as concise and sharp as possible. And please do use the Q&A function on Zoom. So before leaving it to Alexandre, let's do a quick test of the system with one of our 5 warm-up quiz questions. So just one warm-up, so we out of a total of 5 quiz questions. If the chamber could put it online, please. So according to the World Bank, the economic cost of COVID-19 for 2020 will reach $7.5 trillion. In comparison, what is the estimated annual cost of fixing climate change? We've had one answer. It's going up. People voting, getting excited. Then we'll tell you the right number afterwards. Come on, don't be shy. Ten more seconds. Okay, we've had about 30 people voting. And what is interesting is that we are at different places. Alexandre, would you like to comment on that, knowing that the right answer is $2.7 trillion per annum, which in context of the 7.5 trillion for COVID is quite interesting.
Well, I didn't vote because I was given a cheat sheet, and because I'm very fair play, I decided that it wasn't fair to vote with knowing the answer. But I think it speaks volume of how the mobilization of private finance to finance the green transition is piece and parcel of the solution, and that essentially, bar that, there is no amount of public spending, however good you are at public spending, and we're pretty good, that will ever come close to trying and succeeding in that mission.
Yeah, indeed, yes. So yeah, thank you for that, and we're very excited to hear about your report, of course, Alexandre, but also how it will translate in terms of business, financing, and job opportunities. And I'm sure we'll get to that in the Q&A session. So thank you very much. It looks like people know how to use our surprise quiz question facility. So the floor is yours, Alexandre. Thank you.
Well, first of all, thank you so much. Can you hear me? Yeah. Thank you very much for organizing this. It's a pleasure to come in front of the French Chamber and talk about this report, on which I've been working for a bit. And as you suggested, I'll try and be as crisp and as short as possible, because I think that the most interesting part here is not only hearing from the author of the report, but it's more the author for the report hearing back from market actors, from NGOs, from researchers, to see where they agree, where they disagree, where they think something was missed. I think that's a key part, and probably the most important part, actually, of this exercise. So, I guess come back to the Bill Gates quote, or I thank you very much for saying that I said it. I didn't know that I had so much reach in the world. I think that this from yesterday I was listening to the speech given by Ursula von der Leyen to the European Parliament about the state of the European Union. And obviously this question of the financing the green transition is at the core of what is now the sort of headline political objective of reducing emissions by 55% on the 1990 basis by 2050. And so this question of green finance should naturally be at the core of the debate. But going back to the more philosophical side of things, I would say that my generation, at least in Western Europe, has grown to some extent accustomed to crisis. But it's grown accustomed to crises which are very man-made. The financial crisis, the digital bubble, whatever you want to call it, they're sort of economic, the 1974 petrol shock. We've grown very accustomed to the idea that we can come across crisis because a part of the economy, a part of the public economy, the debt crisis, a currency has a problem, and so forth. And COVID, to some extent, and this is why I'm saying European, because Asia might have a slightly different experience, but COVID is the first time that we've realized that a natural phenomenon can literally prive us of our most fundamental freedoms. If you think of the last 6 months, a natural phenomenon with very little human interaction, except if you believe Donald Trump's accusation, has literally left a large share of the population of the world without its basic freedoms to live its life as it wants. And on the back of that, obviously, has created a huge, huge economic damage. And that's why I think that philosophically, climate change, COVID is what looks the most like climate change. It is not, it is man-made, obviously, because of emissions, but it is a natural phenomenon that we are accelerating, and which in time, if it is not challenged, will lead to fundamental restrictions on the way we live, the way we produce, the way we consume, the way we feel, and so forth. And that's why I made this point about COVID being a foretaste of what climate change, unchallenged or unmitigated climate change would look like, because that's the eventual destination if we don't mobilize against it. And I was asked by the Prime Minister to do this report before the COVID challenge, but I think it's made it ever the more important to try and figure out how to bring private finance to finance the transition today. And also today, accumulated with the objective, obviously, of kickstarting our economies back again. It was, just to give you a bit of context on the mission, we did a 6-month mission with people from the executive, so from the Ministry of Finance, the Ministry of the Energy Transition that we have in France. The status that you have, the closest thing to the status that you have as a parliamentary who the Prime Minister asks for a mission is, in the private sector, would be seconded. You're essentially seconded to the executive. You're taken out of Parliament, you're given resources from the executive, and you run for it with 6 months. We went and auditioned nearly everybody in the finance industry, or the main actors in the finance industry in Paris. And we also did an exercise of benchmarking, trying to look both at financial centers who have a history of being quite avant-garde with this subject, you know, the Dutch, the Swedes, the Swiss, and also the sort of largest financial centers of the world, New York and London, who have a power of normalization, a power of sort of a pull capacity which is unmatched across the planet. And from those recommendations, from those 150 nearly auditions or inquiries, I did a series of 24 recommendations, which I presented to the Ministry of Finance and the Minister for the Transition, which are grouped in, I would say, in 3 big chapters. One of the missions I was given is to look at this issue from the question of the competitiveness of the Paris Financial Center. And that was a question about how does the financial center organize itself to tackle such a complex issue, which involves, you know, a variety of actors, you know, from pension funds to banks to insurers to asset managers, but also NGOs, universities, a diversity of expertise. How do you get people who are specialists in climate finance to start talking on a sort of day-to-day basis with, you know, accountants and, you know, investors? How do you create that structure so that you can create a sort of a home for all the reflections in green finance and a home for innovation in green finance? And so I proposed a set of recommendations to the government to reorganize the way financial actors, NGOs, research, and innovators work together in Paris on this specific topic of green finance. I'd be happy to go in any of the details of the recommendation at a later point if you want me. The second thing we looked at very crucially, very closely is the path that data takes from the moment when it is created and in the conditions in which it is created. For instance, a big company, think of Bouygues, when it creates a data point about, you know, the emissions or the water quality of one of its subsidiaries. How is that collected, aggregated, reported, analyzed, bought, sold, re-injected, and how does the whole sausage machine works, right down to the moment when somebody makes a decision on a portfolio or an ESG with ESG data and so forth. We've tried to trace that whole passage, which is quite a complicated exercise because it goes through a variety of stages and actors. And obviously there are estimates, there are averages, and there are all sorts of mix to try and understand how do we develop a green finance which is really credible, not only in the eyes of the investor, but eventually if it comes down to a consumer, in the eyes of a consumer, understandable and clear. And so that implies looking at the quality of the data originally, where we want to go on that quality. That implies looking at the business model of actors who are in that space of processing and reselling data, or creating aggregates of data which are then used in the market to influence investments. And that includes a very technical aspect, which is actually quite important, is the sort of mechanics of how that plugs into a financial actor. You know, the pipeline which brings this business on literally the desk of a trader or on the desk of an investor. How does that translate, and how do those fit together? So we've looked at quite a lot of detail on this extra financial, and made a series of recommendations on what I think should happen for the normalization of that data, for the collection of that data, for the availability of that data for market actors, because my opinion is that it's going to become an increasingly vital piece of data and should be free of access to any actor in the market. It's a question of market equality and competition. And on the basis of that data, how do you then produce tools which enable sort of funds and enable policymakers to really have an amount of credibility on different types of investment mechanisms? So how do you create a very strong, and that's one of the recommendation, transition fund? Because for me, the key here is not defining very narrowly what is green, which we can do quite well, or defining very narrowly what is awful and what is brown, which we can do quite well. It's defining how do you separate a company who is on a very good trajectory towards respect to the Paris Agreement against a company who's not, or a debt product which is in the trajectory or not. And so that's really where I've anchored most of my recommendations, creating a temperature index for portfolios so that you can project on an amount of time where that portfolio is going towards and compare it to the climate change objective. And the reason I've taken the climate change objective, on aside from the fact that it was negotiated in Paris, is because my basic assumption is that if I look at Kyoto, which defined the last 25, 30 years of climate policy, the Climate Paris Agreement is probably the one which is going to define the next 20 or 30 years. Considering the situation at the moment, I think it's unlikely that we're going to have a huge international agreement on climate change in the immediate future. So it's against that benchmark that we need to put the financial sector, as we have to put all other sectors. Finally, and this is potentially less interesting for this group, but I'd be happy to talk about it, I looked at how you can then use those tools and this credibility of data to mobilize private finance in France. And it's very clear. We've been talking in France a lot about the programme de relance, the launch for the, I don't know how you translate that, the support program that the president has announced of 100 billion for the economy. And it is a fantastic program. I support it and I stand by it very, very keenly. But just think that in that same period between March and July, French savers saved 85 billion euros worth of savings. And every single euro of those savings, nearly equivalent to the actual government money which is going to be put in the next 5 years in France, every euro of that project, through an insurer, through an investment manager, is going to end up financing a Mexican train line, a company in Indonesia, a debt product in Poland. And all of these are going to have an impact on emissions and more broadly on the environmental. And the question is then, how do you put to good use? How do you use those tools to put to good use this huge magnum money? In France, that's about 5,000 billion. We have about 5,000 billion euros worth of saving between the different products that we have. So the challenge of trying to make sure that there is a match between the public desire to see change and the way that saving products are created is a huge challenge. And that's modest proposals, but I made a few modest proposals towards trying to ensure that insurance products, saving products, what we call a regular les produits réglementés, products which are regulated saving products to good use towards that end. So those are the three sort of big chapters that I looked on, and those are the sort of recommendations that I made to the finance minister and to the minister of the transition in July. I saw the one of our new ministers yesterday to explain it, and all of those at different speeds, obviously, are progressing. I was very happy to see that last week the label transition was announced by the Minister of the Transition. The Caisse des dépôts et consignations, which is a big French financial institution, announced something quite close to the lines of what I recommended on regulated saving products. So all of those are progressing in sort of lockstep. Have I done the 7 minutes? Or is it a bit too long?
You've done perfectly well. I mean, you've done extremely well. Well done. Nidhi, I think you had a question.
Yes.
Do you want to go ahead?
Yeah, sure. So my question to you, Alexander, you've already given us a background about how the report came into, what triggered the report. But what do you think was the key there in terms of what triggered the request coming from the finance minister, and then also what was it that needed to be fixed at that particular time? And then what was the biggest challenge along with it that you faced to deliver this? A bit broader question for you.
Yeah, of course. So the request came from the Prime Minister. So I was not, the Prime Minister asked me to look into it. So the Prime Minister in France, being the leader of the government, but he's not the president, but anyway, the Prime Minister asked me to look into it, I think, because of three broad consensus based. The first one was that we're not going to manage our climate objectives if we don't find a solution to mobilize private finance. And the biggest pool of financing we can find is savings, by far. It is the same in Germany. And it's something that we've been working at outside the climate arena for quite a long while. We created last year a pan-European saving product, which isn't the success that we had hoped it was, but we have done a number of initiatives towards trying to mobilize that private finance. It's a particular problem in France because we don't have a pension system-based saving product, which creates certain differences in the type of investments that are made by financial actors. So the first realization was this is basically the condition to try and successfully deal and tackle climate change, or at least our performance in the terms of climate change. The second one was an intuition which I concur with, which is, and I think the crisis gives some indication, is that this subject of ESG and green finance is the future of finance. We're at a very early stage to some extent. But the idea that we are slowly walking away from an equation which was purely defined by two objectives of risk and return is changing for two reasons. The first is that certain of those elements that are in ESG, climate change, social conditions, have a direct impact on return and risk. So for investors, understanding these underlying issues, which might impact those two others, those two key indicators, is becoming a central part of our financial system, and to some extent, a huge competitive advantage if you develop a better expertise in. And the second aspect being, which is not as sort of widespread across the world, but that in Europe, or in France at least, we have a model, or we believe in a model of economics where the impact of investment matters as well. So quantifying what the result of financial investments are, of a portfolio are, is becoming more and more important. And it's becoming more and more important to pensioners. It's becoming more and more important to investors. And you can see that line going very clearly through the financial sector. If you see the people the financial actors who are the most pushy on to some extent on green finance have been huge pension funds for civil servants who have said, listen, our users are asking, what is this money being used for? We want you to start thinking about what it's being used for. So that was the second realization. And the third realization is that if you combine those two elements together, it's potentially a huge question for the competitiveness of a financial center. And obviously we would like, and we've been doing a huge amount of effort since I was elected in 2017 and the president just before me to try and make Paris a very, very attractive place to do business and a very attractive place for the financial industry. And this sort of seems like an absolutely sensible thing to work on, to try and make that true for anybody who is trying to figure out what to do with ESG and green finance.
That's brilliant. It's good to know that the thoughts came from the government, where they realize there's a lot to be done in the climate to solve the climate crisis, and this is something that will definitely help resolve to a large degree and extent. Thank you for the answer. Jean-Philippe.
Yeah, I'd like to jump on one of your comments, Alexandre, if I may. Clearly, we've all seen with the COVID crisis a significant acceleration in and much greater visibility in the topic of green sustainability, and whether it's in France or whether it's globally. I think you touched upon the importance of the ecosystem. You touched upon the data and the value chain there. Interestingly, earlier this year, the European Community has signed off on one key challenge, which was around taxonomy, and they issued basically a guidance, more than a guidance towards taxonomy. Now, what in your report, what are the sort of recommendation, like some of the practical ones maybe, that enable to, I would say, unlock that potential on green finance around risk return, around the market structure, around, I would say, sovereignty, around taxonomy? Do you want to pick out of the 24? Do you want to pick one or two of them that sort of like illustrate how you're practically responding to some of those challenges?
Yeah, I mean, I think it's a brilliant question because it's the core of the issue. I would start by saying that, if you go back to it, one of the clearest things that we need to figure out is have to have better data and more streamlined and credible data. And that's a huge challenge in itself. So what I'm saying is that there are certain aspects of data, climate emissions, that we need to know. We now have the sort of scientific knowledge to do it, and we can arrive to a consensus as to how we calculate them. That consensus will not be perfect. It will be, some people will criticize it. Where do you define a scope and so forth? But we need to arrive to a point where for data to have any use, it needs to be credible and comparable. And so there's a series of recommendations for the European Commission on how to do it. We then need very clearly to make sure that data, just like financial data, is available to all the actors on the market, be they big, small, be they investment funds, be they family offices, be they a startup or an insurance company, on the same conditions. And I would rather that we, the French, the Europeans, and so forth, develop our own set of understanding of how those data should be collected and aggregated, because underlying that process of normalization are questions of economic sovereignty. There are questions about how we see the model of our economics tomorrow and of economic sovereignty. And if you look back at the 1990s and the normalization of financial data, to some extent, Europe lost that battle of how you define financial data, and how you define certain financial metrics. I think here we are the front runners. We have more obligations on ESG. 80%, as far as I remember, of ESG data effectively reported comes out of Europe. And so we need to capitalize on that. And at the moment, we're failing to do so. At the moment, we're failing to capitalize on the fact that the natural resources, the mine, is in Europe. We're failing at the second step, which is the processing of the natural resources. And I think we should give as much freedom to the market as to process that data as it wishes. But we should ensure that the data is credible originally. If not, it creates biases then throughout the sort of investment thing. So I think this idea of normalizing data and making it publicly accessible to everyone is pretty fundamental to the success of what I'm proposing. And the the use of that data has then to be codified in a way that the political objectives, the raison d'être of that data is not compromised in the process. And this is why I like, I'm probably a bit simple-minded, but I like, having a clear target and not having 17 or 18 of them. Because I think when you start diluting data and having lots and lots and trying to solve all of the world's problem at the same time, you often lose any understanding of if you're actually progressing on any of these fronts. So that's why I've made a series of recommendations which are very, very angled on green finance. It's not, ODD finance. It is not, ODD is the French acronym, the Millennium Development Goals, not the Millennium, but the Development Goals finance. It is not social finance. All of these are very important. They're crucial. But I think for the carbon side of it, we need to have a few very credible tools to argument them. And this is why there's been a huge, obviously, increase in green bonds in the past 10 years. It's still a very small amount of bonds compared to the total bonds, but it's an exploding market. I saw that Ursula von der Leyen said yesterday that actually a part of the debt program at European level would be financed through green bonds, so which I think is a great initiative. But I'm seeing on the market new products like green sustainability linked bonds, which are bonds where the financial conditions in one way or another are indexed to some kind of environmental criteria. And I think that's a brilliant development, but it needs to be codified to be credible. If the person issuing the bond is the person issuing the target and defining under what condition it's meeting the target, then that bond has a real credibility problem. And that's going to literally create problems all the way down the line to the guy who buys a saving product at the end and who's told this is a green product. And when he digs, he's going to find things that he doesn't consider things. And there is a very clear educational challenge, which is understanding that successfully challenging climate change is not only about financing only pure green players. It's about financing the transition of our economy as it is, as imperfect as it is today, towards an economy which is fully respectful of the environment. So I think those are the three key elements that I'd put forward.
Thank you. Yeah, I mean, that brings lots of questions in my mind, but I will leave them to a few of the participants on that call, because I know they are particularly interested in that topic, whether they are rating agencies, banks, or actually entrepreneurial software businesses in the clean tech space who do a lot in the data. But interestingly, why don't we ask the chamber to put the next question on the screen? And you didn't know about those, Alexandre. And it's pretty related to what you're saying in terms of the data. So of the world banks that have made public sustainable finance commitments, what percentage disclose the corresponding accounting methodology? 74%, 63, 55, 43. And here, hopefully the question is clear. We've got about 20 plus having voted. Let's take a few more seconds. Okay, 5 more seconds. There we go. So as you can see from the results, actually, you've got it right. Only 43% of the world banks actually disclose their methodology as far as their sustainable finance commitments are concerned. Meaning that it's all very good to disclose it, but actually we don't even know how they sort of like calculate it. And I guess that's also one of the points. It's allowing the economic agents to understand what is really your communications about. And maybe we'll discuss later about labeling and the rest. Next question for you, Alexandre, if I may. So, I mean, to continue on that line of thoughts and question on the topic of non-financial information, which is really the bottleneck, which key factors have hindered the development of this strategic piece of infrastructure, according to you? Is it actually at the point of collection? You touched upon it. Is it at the point of the standardization? And I think you said, yeah, I want to go for one, and maybe not everybody will be happy, but let's go with that, and presumably we'll refine as we go. And that's a bit of an Anglo-Saxon pragmatic approach that you have here. That's not the standard French one, if I may say so. Or is it actually about the interpretation and the analysis of the data and how we make it available for corporate agents? And you talk about transition, and it's very interesting because I had a call with a transition fund yesterday, and it's fantastic to see what is really pushing in that direction. So how can we improve that? And now putting you on the spot, more talking about the French fintech ecosystem or financial ecosystem, where do you see one or two measures that can sort of like help that? Thank you.
Yeah, it's a fundamental question in succeeding in the exercise. I think there's a first problem, which is the data itself. Some of the data is very difficult to gather for companies. There are no definitions about precisely what falls into scopes of data. So there's the first question, which is data itself. And then the second question, which is that the data obligations vary from country to country. So if you ask a data provider to give you, the average emissions of the energy sector, the actual answer you're going to get is based on a number of actual figures reported by energy companies. And then on a bunch of assumptions based on those real declarations made in countries where there is no obligation, where obviously the data provider, doing his job absolutely perfectly well, is going to have to, come up with a way of including that. So if he goes to France, he's going to have, at the moment, because of regulation, a pretty clear answer. You can criticize it or not. You can say it's perfect or not. That's beside the point. But then if he goes to a Latin American country, which I won't name, he won't have any figures. So he's going to have to look at the assets of that company and try to figure out, what it's going to be. And then he's going to aggregate all of that together. And that's a simple figure of a simple sector. So if he's then trying to do something more complex, just imagine the aggregates of the aggregates of the aggregates. And at the end, you arrive at something which doesn't mean much anymore, which is why two providers will come up with very different answers. So there's clearly a question of the quality of the data. And there, I think there's a volume side to it. And the volume side is a fundamental sovereignty question, because I think once you have a standard of reporting who is onboarded in a certain, it's very difficult to define what, but a certain number of jurisdictions, the private sector will tend to, fall through, and countries will tend to follow through and to copy a standard. If that standard is established, there's a sort of, in a void, a standard will establish itself just on its market power eventually. And I think this is something where I've made recommendations in France, but the truth is it's at the European level that it makes real sense to do it. We could do it in France, and we've done obligations in France. I don't think there's any evil in doing that at all. But essentially, you need to do it. You need to do it at European level. Then there's the question of standardization of data, and there I think you said something fundamental: is the transparency of it. I think the idea that today, as a big financial institution, you can push through a product or an investment based on a calculus which basically you don't know how it was done, is a real flaw. So whether it's a state, or whether it's an agency, or whether it's a data provider, you need to know very clearly how those figures are put together, at least for the market to be able to make a judgment on their credibility and their respective credibility. And the final point is the access to the data. Because if you're a huge investment, or a huge financial institution, or even a huge non-financial institution, you might have the resources, the kind of resources to pull data from 5 or 6 providers and cross-reference them and try to come up with something which is more credible. But if you're a small startup which is trying to innovate in that sector, it's very unlikely you're going to have access to that type of data. And that's, for me, a fundamental flaw in a competitive market. And that data has to be accessible to all. So then there's a question about how you create an economic model which makes that data available. while sort of self-modernizing and self-updating and self-modernizing. But I make a proposal on that model, because I think if you make a database of non-financial data which is openly accessible, the usage of that database, to take a bit of a Google model, will have huge value. So a provider will be able to derive sort of a financial model from the fact of knowing what people are looking at in his database, both investors and companies. Because companies, if this database is widely used by investors, companies are going to start to wonder, you know, what are my big investors looking at in my value chain? You know, what kind of data points are they really concerned about? And so if you do that, the model that I describe and that I suggest we put is a private model which delivers a public service of having free access to the same data for all, but who self-finances. So it has a high incentive of integrating perfectly well with the financial industry, of modernizing, of updating. I'm not a big believer. There are some people in Europe who are in the European Union or a country deciding that he's going to create some kind of public database or public run source for that data. I think that should be driven by the market.
Yeah, I mean that is a very particularly an open database. That is a transformational business model. It's an interesting one to see how many players are going to go for it, and we effectively will take it. But thank you for this. That's it's really new interesting thinking there. I think, considering the time, I think we may probably switch to the Q&A. I've got many more questions, and Nidhi also, Alexandre, but
Yes.
there is a lot of interest in interacting with you. So I think we'll give the floor to the audience. Nidhi, do you want to ask one of the first questions?
Yeah, there's a question from Justin Sablik, who's asked the question: are there any lessons learned from dealing with COVID that can be applied to the climate crisis?
Well, I'm not sure I have a great answer to this. I think there's one, which is prepare. You know, there's a huge, climate change is a huge advantage on the COVID crisis, is that climate change isn't a crisis in the sense that it is an unexpected event. It is an event which is completely expected, that we can follow through year on year what its impacts are. And we've been able to do it for now quite a long time. So there's a huge difference between the two in how we should approach them. COVID, you could argue, you know, I mean, there are lots of obviously controversies about who was ready and who was not ready, but it was an unexpected event. It was an event which just literally, you know, overnight, nearly, or in the space of a couple of weeks, suddenly you're faced with something which you weren't expecting at all. Climate change, we know what the steps are. You know, we've managed to get nearly every country in the world to sign an agreement to manage to mitigate it. The question is not, to some extent, what are the steps taken? The step is to say, how do we convince all the actors to take those steps now that they've committed to them? I'm very impressed by commitments. They're, you know, states are making commitments, companies are making commitments, institutions are making commitments, and associations are making commitments, you know. But the problem is less the commitments these days than, you know, following through those commitments and actually ensuring that A, they're fulfilled, and two, that they're fulfilled in the manner which is actually what was intended to do. So I think now we're at a moment where we really have to accelerate on creating a standardified and unified vision of how we measure those things. And obviously that's declinable across the industry and across the private sector in lots of different ways. But I think we have a huge advantage with climate change. We know it's coming, and you know, and we have to progress. I think the biggest mistake we can do about climate change, and it's something that I heard a lot during my audition, is the idea that we're going to find a silver bullet. And for me, the silver bullet is carbon pricing. Carbon pricing is brilliant. In theory, it works perfectly well. I mean, you put a carbon price, everybody agrees to it, it increases. Everybody says, you know, this is the perfect option. The problem is, you can't get everybody to agree to a carbon price. You're never going to get everybody to agree to a carbon price. And if you do, it will be too low. And when you do, you will see that there are social impacts in every direction that you're going to have to mitigate one way or another. So you leave from this theoretical perspective, which we should tend to. We should go towards it. That's why we have the ETS and so forth. But don't believe that there is going to be one policy, you know, one magical measure where suddenly all the incentives are going to be aligned. No, climate change is going to be either death by 100 cuts, or it's going to be solved by, you know, measures in the financial sector, in the public sector, with, you know, lots of different measures here and there, lots of different tax incentives, lots of different sometimes very strong state intervention, sometimes market-driven solutions, and so forth. And as much as we should pursue the goal of having a carbon prices, we shouldn't be naive that this is in the real world, where you have to negotiate with states, where you have to, you know, take into account, you know, the reality of the country's needs and the reality of the industry's need, where you have to take account that countries have very, very different expositions to climate change. And so quite legitimately, it is a different priority depending on the country. Well, you're trying to say that you're going to solve all these issues by one measure is for me a very good exercise of academic work, really important, and really, I'm sincere, a really good exercise of intellectual, you know, of tending towards an intellectual perfection, but it is not a model for the real world.
Yeah, no, absolutely agree. I think one of the key things that came out of COVID was how countries came together, whether it was coming up with solutions or, I mean, even looking at research, so sharing papers on how the disease spread and things like that, where you see people and countries coming together to solve the crisis of COVID. I think that's something very important if we can all take in and try to apply the same approach to resolve the climate crisis. That would be something like really good to have in future. So yeah, definitely agree with whatever you said. Absolutely. Jean-Philippe, do you want to go on to the next
maybe
question?
just to try to reposition it effectively at a lower level and leveraging a question that was just asked by Stéphane Robinson, where Stéphane says, what are the key regulatory changes in major countries that are required to boost green finance and give it adequate scale globally? I mean, you touched upon the carbon pricing. That's a big sort of like silver bullet. Great. You talked about the challenges in terms of the data at local levels, country by country. So how do you manage effectively, maybe let's say at the European level, to have a proper coordination, the taxonomy point, such that we are all going in the same direction from a regulatory point of view?
Well, first, let me say hello to Stéphane. I'm delighted to see that to hear that he's on here. Listen, I think it comes back and it boils down to some extent to what we were saying. The NFRD, for instance, which is the review of the non-financial reporting directive, which the Commission is supposed to propose towards the end of the year or now early next year, I think, because of delays linked to COVID, is a fundamental part of it, and it is a regulatory obligation. I think the exercise which is happening today, which is not legislative, but the exercise which is happening today of climate sort of stress test run by central banks is essential. It's essential for two reasons. The first is it's pushing everybody who's concerned, mostly sort of financial institutions, to realize their own exposition to the financial risk associated with climate change. Which, if you go back to what Marcani said in his gigantic speech of 2015 at Lloyd's, is the problem is the challenge, and it goes a bit to what Nidhi was saying, where I completely agree. The challenge, the hard thing about climate change versus COVID is that the incentives are wrong for everyone. They're too long for a politician, they're too long for an investor, they're too long even for an insurer or a pension fund. Because actually an insurer, you can say an insurer has a very long investment view, but an insurer reviews his insurance clause every year. So, you know, an insurer is not exposed to climate change on a very, very, very long perspective, because he is adjusting his business model every year to his risks. So even he doesn't have the kind of the time frame is too long for us to take on. So what the central banks are doing in the UK, in France, in Holland, of really asking banks to sort of dig down and try to understand their exposition is fundamental. And it's something which is going to grow in importance over time, because at the moment, this is the first, you know, year or 2 years, and this is a learning process. You know, banks are suddenly realizing, you know, this is quite complex, because we had a department which took care of these things before, and now suddenly we're having to ask every department in the bank, however, minor their exposition traditionally thinking to climate change is, to really think about those issues. And that means that, somebody who would never think about talking to a risk expert on climate change is forced to do it, a trader, the guy who runs the branch, and so forth and so forth. And as this grows in intensity over the years, as regulators learn from that experience as well, because the truth is it's relatively new for regulators. We've come up with scenarios, so we're sort of testing. So I don't think it should be it shouldn't be a regular interaction based on sanction at the moment. It should be a regulatory intervention based on sort of mutual learning of, how we quantify those risks. So that type of regulatory approach is essential. And then obviously you have a fundamental issue, which is you need the big blocks of the world to align to it. And I think Europe is fully behind and committed to that agenda. As I say in the report, the US for the moment at a federal level isn't. The White House isn't exactly, it isn't the first subject, the first topic on the mind of the White House. It's a bit of a shame because it was a very influential Twitter account. But if you look in detail of what's happening in the US, you realize that a change of administration or a change of perspective could make things move very quickly. At the moment, there is a bill, which is a bill a bit like the non-financial reporting directive, not at all the same, but an obligation to report, which has been sitting there waiting for an ability to go through. The day that possibility emerges, it will go through pretty quickly. There are regulators in the big financial centers who happen to be also generally in the US, big democratic states with a key concern for climate change. If you think of California and the big pension funds, if you think of New York, who are moving quite fast along these things. I spoke to quite a lot of regulators in New York who are looking at the exposure of New York to climate change and the municipal bond market to climate change, and it is very, very high. So those pieces have to still move, and obviously then there is China, who is crucial. So I think what we have to do at a regular point is arrive at consensuses between those three blocks, but the first step is for us to move forward faster to arrive at a European consensus.
That's clear. That's clear. Thank you. Can I put you on further on one point on Europe and the taxonomy, and so that that questions come from a senior policymaker at the European Community, Anna Sanchez. Hello, Anna. And she says, actually, what do you really think about the EU taxonomy for sustainable activities? And I would say further to that, is that easily implementable? And linking it to your idea of the data, does that mean that private actors or public actors can effectively use that taxonomy for their own reporting and create the whole of that virtuous value chain on the data?
So it's a good question. And coming from a European official commission, I've got to be very careful about the way I answer. Listen, I think the taxonomy is a huge step in the right direction. It is a fundamental change to be able to arrive at a consensus, at least a grammatical consensus about what we call what and what we consider to be a green or in transition. I think there are still quite a lot of outstanding questions, and I think a lot of the people on this call might have opinions about this, about how the market really understands the taxonomy. And from the conversation that I've had, there are lots of different stakeholders who are still struggling to understand all its implications and risks. So I think there's still, it's an amazing political achievement to have gotten there. There's still a huge job of, explaining, detailing, providing pretty concrete answers about how it works, so that it sort of sifts down through the system. But I have no doubt that that's going to happen. But obviously this is, you do a huge political step, you adopt a taxonomy, it makes the press, but this is to some extent, this isn't the end of the beginning. This isn't the end of the war. You still have a huge, amount of work ahead of you on making sure that it is used and properly used throughout the market towards the end goal. But I think it's a huge step in the right direction.
Thank you. I think we may be running short of time now, Alexandre, and let's try to do it the Anglo-Saxon way and to be sort of like on time to finish. There are many more questions, and listen, sorry for not having had the opportunity to pull all your questions. Nidhi, do you have a sort of like a last word or with Alexandre?
Absolutely. Yeah, absolutely. I think from what, thank you, Alexander, and for answering all the questions that we had, and for the fantastic the work that you've done, and hopefully countries other than France can also get inspired and definitely work towards solving the climate crisis. Clearly, the green finance sector has a very important role to play in especially the post-COVID economic recovery. I think with projects such as that can stimulate clean growth and create jobs for every country, I think in every country. So no doubt, I think in terms of improving people's health and well-being at a time like this, when this has never been that more important, green finance will definitely pave the way for a better future. Thank you very much for your time to speak to us today. And it was a pleasure having you at our forum. I really enjoyed hearing all the details you shared and about the report and the green finance, something of really great interest to me, but very little knowledge in that sense. So yeah, I was really enlightened. I hope the audience had the same experience. And thank you for all the participants today who joined us and for their very interesting questions.